Welcome to the week ahead for financial markets. Mike Smith, head of client education and trading, and of course, senior analyst at Go Markets. Delighted to welcome you to this session. So let's start with our 5 market moving factors that may influence sentiment this week. Of course, technically the major indices are still near record highs despite a pause at the end of last week subsequent to the PPI data, which was warmer than expected, and the fears of tariff-induced inflation returned to some degree. Haven't seen that in the CPI data, obviously, as yet. Price increases on the consumer remains the big question. Further moves higher are going to be dependent on key potential sentiment changing information. And we are coming to the end of the US earnings season, which still continues to outperform as it nears its end. We've got the big retailers left. Over 90% of the S&P 500 have reported so far, and over 80% are beating both EPS and revenue expectations, which is a spectacular result, and in some ways supports markets at these levels that they're trading now. One of the other key factors is the geopolitical situation in the Ukrainian-Russian conflict. Disappointing, there seemed to be a lack of progress from talks held between Trump and Putin last week, but over the last 24 hours, we've heard some murmurings across the wires that there may be some resolution of some aspects of the agreement. We haven't got any details of that yet. They haven't been released, but keep an eye on the news wires over the next few hours, because anything that does appear to be moving towards that would be received favorably by markets. One of the key economic events of the annual calendar is the Jackson Hole Symposium. Why it's important is that this event has a headline act of the Fed chairman. So Jerome Powell will be giving some in-depth discussion on what is likely to happen with Fed policy, not only right now, but going forward. Remember, the markets have essentially priced in a rate cut in September, although, of course, Trump would like it more and would like it faster. We will see if there's any telegraphing about what the rest of 2025 would look like. On the chart front, we saw copper bounce over the last couple of weeks subsequent to this tariff-induced drop that occurred just before the August the 1st deadline, where there's now a 50% import tariff on copper coming into the US. We are seeing some green shoots of buying here, and you can see there that we had a fairly positive candle, took us up to around about 457 intraday during the course of last week. You also have some buying coming into Asia. We like this also because it corresponds to significant price consolidation around that level as well, 457 here through May and some of June. So move through that. Let's see it start to test not only the high of this candle here, but also potentially this 200 MA that's sitting around about 472. So we think that's worth keeping an eye on. That technical bounce may offer some more upside potential, one worth keeping an eye on, particularly when the LME and the US open at their various session times over the next few days. So that's it for today. Remember to pop into our live market updates, which happen on Monday and Thursday every week. And of course, we've got our deeper dive inner circle session on Wednesday evenings, which looks at strategy, asset outlooks, potential trading psychology, gives you innovative practical advice on what to do, irrespective of what level of trader you are right now. I look forward to seeing you at any of those sessions if you can make it along. And of course, remember, we're always here to help. So if you need support in any shape or form, just give us a call and we'll do what we can to solve any issues or challenges you may be having. Most importantly, have a great week ahead. Trade safe and see you again soon. Bye-bye for now.